Have you ever wondered why so many people are drawn to real estate investments? Indeed, the intrigue of real estate investments is something that captures the attention of many. But why? At first glance, the allure seems to stem from the perceived profitability and stability of the real estate market. For centuries, land has been considered a valuable asset, a tangible commodity that, unlike stocks or bonds, you can see and touch. This perception of real estate as a safe haven investment often lures both novice and seasoned investors alike. They see it as a means to secure and grow their wealth, especially in times of economic uncertainty. But there's another dimension to this intrigue. The role of media and word of mouth in shaping perceptions about real estate investments cannot be understated. Television shows glorifying property flipping and renovation, news articles showcasing success stories of real estate moguls, and everyday conversations about skyrocketing property prices all contribute to the narrative that real estate is a surefire way to financial prosperity. This narrative is powerful, it's persuasive. It creates a perception that real estate investments are less risky and more rewarding than they might actually be. It fuels the belief that anyone, regardless of their financial acumen, can succeed in the real estate market. Yet, let's be clear, this is not to say that real estate investments are without merit. They can indeed offer substantial returns and serve as a viable wealth-building strategy, but it's crucial to recognize that the intrigue of real estate investments is not solely rooted in cold, hard facts and figures. It's also deeply intertwined with our perceptions, influenced by media, society, and our inherent desire for financial security. So, the next time you find yourself intrigued by the prospect of investing in real estate, remember to look beyond the surface. As it turns out, there is more to this fascination than meets the eye. The psychology behind real estate investments plays a significant role. So, what exactly is the psychology behind real estate investments? Well, let's dive in. At the heart of it all, we have cognitive biases. These are systematic errors in thinking that affect the decisions and judgments that people make. Now you might be thinking, systematic errors? That doesn't sound too good. And you're right, it's not. Cognitive biases can greatly influence your investment decisions, often in a negative way. Let's take a look at some of the common biases that can creep into our real estate investment decisions. First off, we have the confirmation bias. This is the tendency to search for, interpret, and remember information in a way that confirms our preconceptions. For instance, if you've convinced yourself that a certain neighborhood is a great place to invest, you might ignore evidence to the contrary and only focus on information that supports your belief. Next up, we have the anchoring bias. This is the tendency to rely too heavily on the first piece of information we encounter, the anchor, when making decisions. In real estate, this could be the initial asking price of a property. If the asking price is set high, you might end up paying more than the property is actually worth simply because that initial price was your anchor. These biases and others like them can lead to overconfidence and speculative bubbles. Overconfidence can make us believe that our judgment is better than it actually is, leading us to take on more risk than we should. Speculative bubbles, on the other hand, occur when prices go up rapidly due to excessive demand, driven by the expectation that selling price will be higher than the buying price. But here's the good news. By understanding these biases, we can guard against them. It's about being aware of our own thought processes, questioning our assumptions, and constantly seeking out new information. It's not an easy task, but it's a crucial part of being a successful investor. Understanding these biases can help make better, informed investment decisions. So the next time you're about to make a real estate investment, take a moment to consider the psychology behind your decision. It could make all the difference. Emotions also play a crucial role in real estate investment decisions. Our emotions, those inherent feelings that surge through us, often dictate our decisions in ways we might not even realize. In the realm of real estate investing, they are the unseen forces that can either propel us towards success or lead us astray. Let's take an example. Picture the thrill of spotting a promising property, the rush of excitement as you envision its potential. This positive emotion, this exhilaration, can be a powerful motivator. It can push you to take risks, to leap into new ventures, to invest in properties that others might overlook. But it can also cloud your judgment. You might overlook potential pitfalls, ignore glaring red flags, and make decisions based on impulse rather than careful analysis. On the other side of the spectrum, we have our negative emotions. Fear, for instance, can be equally influential, though its effects are often quite different. Fear can make us overly cautious, prompting us to bypass opportunities that carry even the slightest risk. It can paralyze us into inaction, causing us to miss out on potentially profitable investments. And let's not forget about regret, that nagging feeling that keeps us up at night. Regret over past mistakes can make us second-guess our decisions, fill us with doubt, and prevent us from taking decisive action when it's needed the most. While it's impossible to completely eliminate emotions from the decision-making process, it's crucial to manage them effectively. This involves recognizing when your emotions are influencing your decisions, taking a step back, and evaluating the situation objectively. It means not letting the thrill of a potential investment blind you to its drawbacks. It means not letting fear prevent you from taking calculated risks. Remember, real estate investing isn't about making decisions based on gut feelings or emotional responses. It's about making informed, rational decisions based on thorough research and careful analysis. So, the next time you find yourself about to make an investment decision, take a moment, breathe, reflect. Consider if your emotions are in the driver's seat, and if they are, take back control. Mastering your emotions is key to successful real estate investing. Salkuso says, social influence is another powerful factor that shapes real estate investment decisions. It's a silent persuader, often nudging us in directions we might not initially consider. One of the most common manifestations of this is herd behavior, a phenomenon where individuals follow the group, often disregarding their own analysis or instincts. Now, this isn't unique to real estate, but it's certainly a prominent player in this arena. Herd behavior can lead to market bubbles, where prices skyrocket due to enthusiastic buying, often spurred by the fear of missing out on lucrative opportunities. It's a contagious excitement, a shared belief that prices will continue to rise indefinitely. But like all things inflated beyond their actual value, these bubbles are bound to burst. When the bubble bursts, the market crashes. Suddenly, properties that were bought at a high premium are worth much less, leaving investors in a lurch. The herd that was once charging ahead in a buying frenzy is now stampeding in the opposite direction, selling off properties in a panic. This is the destructive power of herd behavior. But how can we guard against this? The answer lies in independent thinking. Independent thinking is the practice of making decisions based on one's own analysis and judgment. It involves questioning the status quo, challenging the popular narrative, and trusting your own research and intuition. In the context of real estate investing, this means not letting the decisions of others sway your own. It means not buying a property just because everyone else is, and not selling one just because everyone else is. It means taking the time to understand the market, to study the trends, and to make informed decisions. This isn't to say that we should completely ignore what others are doing. After all, there's wisdom in crowds too, but it's about finding the balance, about taking the pulse of the market without getting swept away by it. Being aware of social influence can help avoid costly mistakes. It's about navigating the market with a compass of your own, understanding that while the currents of social influence are strong, you hold the power to steer your own ship. Let's summarize what we've learned about the psychology behind real estate investments. It's been quite the journey, hasn't it? We've delved into the mind's intricate workings and how it plays a crucial role in the world of property investing. We began this exploration by acknowledging the allure of real estate. It's a tangible asset that gives a sense of stability and assurance. The idea of owning a piece of the world, a plot of land, a home, excites us. It's an investment that you can see, touch, even live in. There's a certain romance to it, isn't there? Then, we navigated through the maze of cognitive biases that can affect our investment decisions. Confirmation bias, overconfidence, and the illusion of control can all cloud our judgment. making us see opportunities where there may be none, and risks where they might not exist. Understanding these biases and keeping them in check is crucial, as they can significantly impact our real estate investment outcomes. We also discussed the role of emotions in real estate investments. Let's be honest, our hearts often have a say in our decisions. The excitement of a new investment, the fear of a potential loss, the satisfaction of a successful deal. These are all emotions that can guide or misguide us. Being aware of these feelings and managing them effectively is a critical aspect of successful investing. Finally, we touched upon the power of social influence. We live in a connected world, and the opinions of others can often sway our decisions. Whether it's a hot tip from a friend or an expert's advice on a podcast, we need to remember that our investment choices should be based on our research, understanding, and comfort level. In conclusion, the key to successful real estate investing isn't just about crunching numbers or following market trends. It's about understanding the psychology behind it, the allure, the biases, the emotions, and the influence. It's about knowing yourself as much as you know the market, because in the end, you are the most important factor in your investment journey. Remember, the key to successful real estate investing lies not just in the numbers, but also in understanding the psychology behind it.